Okay, good morning, folks, and welcome to a quick morning update. And then we're going to segue into member stock chart requests. Let's begin the morning off with economic data. There's not much that's going to be released today that can move the markets. We have leading indicators that come out. I think it's at 10 a.m. Eastern Standard Time. We also have weekly jobless claims. That comes out each week, unless there's a big surprise there, which I'm not expecting. I don't expect it to be a market mover. So net, it's going to be a quiet day in terms of economic data. No real economic data coming out tomorrow. So the probability of us getting sideways to lethargic trade is fairly good. You're seeing the S&P futures. They are weaker this morning. No shock there. On Market Wrap last night, I discussed with members that yesterday's price action is consistent with a process. I have not been bullish on this market, and with yields pressing higher, I think that the process of putting in a top on this market is becoming a bit long in the tooth. So I would caution everyone. I started the Contrarian Trade to help people, and even if you're not a member, think about tightening up your stops. I have posted several videos on the blog, on YouTube, on StockTwitch, Twitter. They're all posted there. They go back to December, January. At that point in time, the technicals of the market, as I stated then, was simply unsustainable, that traders were whistling past the graveyard. You're hearing the bulls back on CNBC yet again cheerleading this market, and they have no clue. Half of them, they just began shaving, and I find it shocking that they're pontificating on CNBC. They have no idea about what they're talking about, because this market is becoming a very dangerous place to be long of. Now, there's going to be a ton of money to be made, but you need to think defensively. Build capital positions. Without your cash reserves, you're a sitting duck in this market. Now, taking a look at this morning's price action, you could see that we flashed yesterday a bearish key reversal on the session. This is a 4-hour chart. They're trying to hold support, which was resistance last Wednesday, Tuesday, and even back to the 8th, where it acted as resistance as well. Now, taking a look at the NASDAQ 100, they are hanging on by a very thin thread. You saw major reversal bars on Amazon yesterday. Let's bring up Google. Reversal bar yesterday as well. And for you folks that are out there that are saying, you know what, I don't understand why he's right and the pontificators, the talking heads on CNBC, they're wrong. And the reason is this, is that we have interest rates. Let's go to it. We have interest rates which are rising. This is the 10-year yield, the price of the bond. And you can see how weak it is. We are at lows not seen since our debt was half of what it is now. So when you hear people out there saying rates aren't normalized for where they should be historically, they're absolutely correct. I don't argue with that. What cannot be normalized is the amount of debt that we are paying every month. And every time we see a tick higher on the 10-year yield, the 30-year bond price, we are paying out more in debt. It's the giant sucking sound of capital leaving the United States. And forget about the twin trade and budget deficits. This is absolutely a mess. Let's take a look at the U.S. dollar. For whatever reason, the U.S. dollar is being viewed as a flight to safety. Of all currencies, a flight to safety. You can see that on this 4-hour chart. We flashed a bearish reversal bar last night, and that we should open up roughly on the morning versus yesterday's close. We've given up a lot of the gains in the after hours. We'll be up slightly. We are trading up above 90 yet again. So the path of least resistance in the very short term is up for the U.S. dollar. There's no doubt about it. Longer term, I'm very bearish on the dollar. Gold. We are consolidating across a support level. We're off the lows of the session. We still have a long-term breakout on a monthly chart. The 4-hour chart, the daily chart still look abysmal. I would not be a buyer of gold or the miners until we see strength on a closing basis. What do I mean by that? Well, on a closing basis means, take a look at yesterday after the FOMC minutes were released. We rallied and then faded. We flashed a reversal bar. So had you bought up here because everyone got all excited, well then, you're sitting with a big fat ugly loss right now. You need to wait for a closing breakout above resistance levels. That's the discipline. We discussed this last night on Market Wrap. I'll be discussing it every night because there will be money made in this market, either to the upside or to the downside. But to profit, you need to dismiss the talking heads and use the charts. All right, so if you lasted this long through this commentary, thanks for putting up with my tirade. But there are a lot of people out there that are supposed to be professionals, and all they're doing is speaking their book. If I'm wrong about a position, I admit it and I move on, and I keep a lot of followers. That's how I do business. How they do business on CNBC, all the talking heads, is that they need to BS everybody into having them think that they are the smartest guy in the room, and there's nothing further from the truth. What they need is a cup of humility, and maybe they'd be taken a bit more seriously by guys like me. So let's get to member stock chart requests. Let's kick it off with Bitcoin. This is a weekly chart. I spoke about Bitcoin yesterday, and let's go to a daily chart. This is not, well, you know what, let's stick with the weekly chart for a moment. Thus far this week, the week isn't over yet. Don't go freaking out by what I'm about to say, but we have a bearish key reversal on the week. Not good. All right? So what that means is that there's sellers above. We discussed this yesterday on yesterday morning's commentary. So the sellers, the buyers who bought back here, they just became sellers. They want their money back. Many of them who bought up here didn't think they were going to get their money back when the price of Bitcoin hit a 6 handle, a 5 handle, and now they're just happy to get made whole. So don't underestimate the power of overhead supply. And that's exactly what Bitcoin is contending with now. It's not like what you had back here where there were no prior sellers looking to get made whole. For the moment, that is all changed. Now, once we break out, if we break out to new all-time highs, well, then it's game back on again with no overhead supply. But for now, everybody that looks to get long or is long of Bitcoin must know that you have competition. Competition for a price level. People want their money back. Buyers back here simply want to get made whole at your expense. So how do you contend with this? The money is made on the buy, right? You need to buy on a breakout. You need to buy on a pullback to a support level. If you buy in between, you're going to get burned. Daily chart. I don't know why I'm yelling today, so my apologies. So on a daily basis, we had a high of 11,788 on the 20th. We have since reversed. We are now retesting the breakout point. If it breaks, well then, you need to watch out for 8,000 and then 6,651. If this breaks, we're going a lot lower. So I would avoid these shares right now until, of course, we retest the support level here and flash a reversal bar. What might that look like? What that would look like is this right here. Last seen December the 1st. And on that reversal bar, what you'd be looking for next, because you don't want to go jumping in with both feet, opening up your long position, you want to wait until we take out a prior high. And more importantly, most importantly, we close there. All too often, people believe that simply because we made a new intraday high, that's good enough. It's not good enough. What it is, when you make a new intraday high above a prior resistance level, the market just told you that due to the fact that it was unable to close above it, that there are more sellers than buyers. You need to see a close above that level. I teach members this constantly. And it's what honestly kept us from chasing the stock market higher after yesterday's Federal Reserve minutes. So to wrap up Bitcoin, watch for a bullish key reversal off of support. If you don't get it, you must avoid and think about stopping out on a breakdown below this support level here at the 10,000 level. So warning flag is on the track for Bitcoin. All right, the next chart up is the SPXS. This is the Contrarian S&P 500 leveraged bear ETF. All right, so this puts you short of the S&P 500. If you buy it, you're betting that the stock market is going to drop, to keep it simple. So do I like it? Yes, and oddly enough, I'm watching it. I have been watching it. So what are we looking for here? What we're looking for is a setup, and that setup has already begun to take shape. Now, yesterday, we flashed a bullish key reversal on the day. We do have resistance above, such as right here at the 2940 level. So you can't go running in with both feet. If your plan is to open up 2,000 share position, you can't go jumping in today opening up a position of 2,000 shares. You'll get burned, because remember, this is a short ETF and you have the system that is against you. And what do I mean by this system? What I mean by this system is that you have Washington that believes that the economy is the stock market. And that goes for the president himself. He owns this stock market, where he should have said, as he did during the campaign, that this is a big, fat, ugly bubble. He should have stuck with it. He should have been blaming Obama for this mess that we're about to go through. But he didn't. So now he owns it. So he must keep this illusion of a bull market going. Don't underestimate the tenacity of these people in Washington to keep the party going. CNBC, Fox Business News, they want to sell advertising. So they want to keep the party going. The banks, well, they don't have a net short position yet, and they're still net long, so they need to keep the party going so they could dump their positions to their own customers when they know the shares are going to drop down. We've been here before. We were here in 2007, 2008, and 2000, 1997, 1987. Don't ignore the signals by the market, folks. So back to SPXS, and thank you for bearing with my tirade this morning. I like the shares. I'm almost ready to pull the trigger. Members, more to come here on SPXS. It will put you short of the S&P 500. So this is not for the faint of heart. If you are risk adverse, yet you want to short the S&P 500, join the Contrarian Trader. Let me know your intention, and I'll give you my thoughts on whether or not it's time to short the S&P 500. And you can just short using the SPY. The next chart up, Lululemon, LULU. I spoke about this one the other day. It's holding up well, but we're seeing a lot of topping action. So, as I mentioned earlier, when you see topping tails on a chart like this, it implies that we have resistance above. If we pull back to a weekly or monthly chart, we'll use a weekly, you could see that we have a nice breakout of a bull flag formation. But the problem is we closed at 81.16 yesterday. The all-time high was back here at 81.81 on an intra-week basis. So until we overcome these sellers, I wouldn't be a buyer of LULU, especially with the markets beginning to roll over. So if you plan on trading the breakout on LULU, I may join you. But please leave a note in the forum, and that'll help me to remember that I need to keep tracking LULU. And let me know your intent. Do you want to go long? Do you want to go short? I certainly wouldn't short LULU. Let's leave things off with the UGAZ. This puts you long of nat gas. It's a leveraged ETF, not for the faint of heart. Now, I was asked by one of our members about UNG the other day, and I mentioned that we were looking at lethargic trade. We had not broken out above this resistance level, and oddly enough, that day, we did gap up. We did move above the support level. So my tune changes, right? I'm an opportunist. I'm a technician. I like to see goals overcome by our stocks, ETFs, etc. What do I mean by a goal? What's our goal? Well, when I was asked about the UNG and by even looking at the UNG, you're talking about the UGAZ as well because they trade in tandem. We were down below a resistance level, yet we were holding a support level. So we were trading in the middle of a trading range. So I can't buy it, right? Because the situation needed to be resolved either to the upside or to the downside. And it appears as though we're being resolved to the upside. And the good part about nat gas is that it's not as levered to a stronger US dollar because we produce so much of it here in the States. So one thing that we can't do is ignore the trend. And that trend is clearly to the downside. Is this downward move over? Simple answer, I don't know. When will I know? Let's update the chart. We'll know that this downtrend is over when we begin to break out above this upper band of resistance right here. Now, we did so back here in January, yet that breakout failed. So just because we break out above this upper band of resistance and close there doesn't mean the downtrend is over, because you can always see a head fake. Now, one of the reasons why I would have been skeptical on this breakout is because we didn't come off of a higher low, meaning this prior low here at 49.72 was a lower low than the prior low at $80.80. Now, if we hold this higher low here at 59.81 on a weekly basis and we rally up and through resistance here, now we're telling a different story. And technicians like me, we're going to take notice of the fact that, wait a minute. We have a higher low. We have now broken out above resistance. There's only one element missing, and that is a higher high, a rally up and through 105.66. Would I wait before I got long of UGAZ? No. You could buy it right here, right now if you want, because we know that we closed above a support level on a daily basis. Would I be aggressive? No, definitely not. Small position, scratch the itch. Set your stop tight right below the week's lows or last week's lows, because if we break down below last week's lows, in all probability, we're coming back down to the lower band of this downtrend channel. How do I know that? It's because that's what typically happens, right? History repeats itself. When do I buy more? On a close above the upper band of resistance. When do I even add more? Even more aggressively. On a rally and a close above 105.66. That would mark the end of this downtrend. But I would not be an aggressive buyer now. But things are beginning to shape up. That's it, folks. Everybody have a profitable trading day. I'll talk to you soon.